New all-time highs for the stock markets today, along with Bitcoin trading just $3,000 from another new all-time high. Today we're looking at the final stage of the everything bubble. We're seeing it across the board: Bitcoin, stock markets, commodities, and the cracks beginning to form for the major collapse. At least that's what we're expecting using the 18-year cycle. Hit the like, subscribe to the channel. Let me know if you got here before the bots in the comment section. Almost nothing we can do about those, so sorry about that, guys. Moving on with the data and updates for today, bringing everything up to date for you. Bitcoin, as I said, it's trading now at 109. Looks like the Asians closed out yesterday's bar at $108,888. We have seen an overbalance in time and price for the rally up from the June 2022 low, $11,500 over the course of 10 days. This has exceeded the previous move higher from the 5th of June low. That was $10,300. So we got an extra $1,300 and it is extended in time as well. So this is very, very good news for the upside for BTC. Doesn't mean that it has to go up further today, although it is looking like it wants to line up to do that with that strong close. And the market sentiment also was dragged higher here at 73. So we haven't yet reached extreme greed again. The last time we saw that was in May. So May 23rd, coming off the back of the all-time high price. Now, seeing as we are in the second half of the real estate cycle, in the 14 years up from the US real estate and economic cycle low, which basically dictates the entire markets globally. Now, we're also seeing the same thing on the S&P 500 with new all-time high prices. Yet, we aren't seeing the market sentiment for the stock market reach those extreme bullish levels like we did back at some of the previous highs that we saw in the market. July was one of those, July 2024. It's still relatively balanced here. However, the bearish side of the sentiment is still holding out. So I think there's still further to go in the upside for the stock market because we haven't seen that froth come in, even though the price is at new all-time highs. And when we see the S&P 500 hit new all-time highs and start to trend pretty cleanly further up in the new all-time high prices, Bitcoin typically follows suit. We could see it from last cycle. The S&P ran into new all-time highs. Bitcoin, new all-time highs. But of course, it is far more volatile. It runs up in bigger gains, then has to correct those gains, coming back in the case of 2021, 50%, before it was able to run on again to another new all-time high. Now, it did peak earlier than the S&P 500, just like it did in 2017 as well. So it follows more closely to the NASDAQ cycle as opposed to the S&P 500 cycle. However, it is a good leading indicator that if the S&P 500 is looking healthy, in the case of prices going up, meaning healthy, then it's natural that we would anticipate further upside for the Bitcoin price. It's also happened in this cycle here where Bitcoin ran into new fresh highs in March 2024 and the S&P 500 had jumped into new all-time highs around January of 2024. So it was leading it by a couple of months yet again. And of course, we just saw this happen in June, and it seems like if we're on the same trajectory here, then Bitcoin's probably going to hit another new all-time high, if not today, at least in July by this stage. Now, we've gone into a deeper dive with Bitcoin on our weekly Bitcoin report. There is a link to this in the video description. It goes out today, so make sure you get on board with that and you'll get that to your inbox, along with 2 other reports that we produce weekly, looking at the economic update and also altcoins as well. Link to this in the top of the video description. So, following on with the economic update, the interest rates have jumped, well, the probabilities have jumped to a cut at the next meeting. This next meeting is coming up in 27.5 days. If you've been following the channel, my view is that we may see a cut, but nothing substantial to what the masses are hoping for. To me, substantial would be coming down to meet somewhere where you've got the EU sitting in the 3% and the UK cutting and Canada cutting and Australia cutting, and a lot of these Western developed countries have cut. However, the US has stayed relatively stable here at 4.5%. Now, of course, there's a lot going on there with the unemployment numbers. They're forecasted to increase from 4.2 to 4.3%. This is the chart in the background here in the blue. However, even at 4.3%, it's still at relatively or historically low levels. Very, very low levels. Now, it doesn't mean that the trend isn't going up and things are starting to crack and unfold there in the US. But in terms of if this does rise, maybe that puts a dampener on the stock market for the short term, but still looking out towards the peak of the cycle, I still think we have further to go. And those cracks that we're looking at for the peak coming in and then the collapse stems around the yields and the bonds. That, of course, is also part of the US dollar. US dollar is weakening. They need people to buy their bonds. Their bond prices have also been going down, been absolutely slammed over the last 5 years. 192 down to 115. And to get that money in with a lowering US dollar, basically collapsing US dollar price, not in theory, but the price itself, the yields continue to increase. So this is the tough part now for Jerome Powell, the Fed, that sure, some of the things for the economy are changing and it might be a good idea to cut the rates in the short term, but in the longer term, this is going to put pressure on the bonds. The yields continue to rise here, but if the yields do fall, then there's going to be no one or less people buying the bonds, which in turn would mean less demand, which in turn means lower bond prices, lower dollar, and then that is going to really be difficult for the US this time round compared to previous cycles where they've been able to print their way out. They continue to print and cut interest rates. They're going to have no one buying the bonds. Therefore, there's going to be no one to repay these debts. So that's going to be very, very difficult towards the peak and collapse of the cycle. Moving forward from that, we still see higher prices for the stock market. Plenty of data suggesting higher prices for the stock market because those problems that we're foreseeing with the yields and the bonds haven't come to fruition yet. But in terms of the stock prices and the data, there is a lot to suggest that there is further upside in the final 6 months of 2025. Quarter 4 and quarter 3 have a very strong probability of an average jump here of around 7% for those quarters, potentially somewhere around 16 to 18% towards the end of the year if we're only looking back to these 5 data points. But if we go all the way back to 1950, then we have a rough average here of 5% increase. Now this is if we get the slingshot play, S&P 500 performance after a negative quarter 1, so quarter 1 dumping, and then a greater than 10% quarter 2, which is exactly what we got with the S&P 500. That's why we're looking at those data points. Huge, huge slingshot or V-shaped recovery. Dump and a massive correction, which typically leads to higher prices, which then I think would typically lead to higher prices for Bitcoin as well, especially because the sentiment in the US hasn't collapsed at this stage, nor has it gone absolutely bullish. So we're sitting somewhere pretty comfortably there in that sort of Goldilocks zone. Next up is the S&P 500 average forward total return, so new all-time highs. If the market hits a new all-time high, what can we look out for the rest of the year? Well, 1 year later, this data also suggests roughly 10 to 11% return. But the interesting thing with this is it time to take the chips off the table? Is it time to start selling? Not historically, as it says here. Usually 1 year later, you're left with about 10% increase on those numbers. That I think is also going to be good for the Bitcoin, of course. And if Bitcoin keeps going up, it normally outperforms what the S&P 500 is doing, especially if it's in its final stage of that bull market. So the S&P 500 has averaged 10% over the next year following all-time high. But then over those 10 years, you're looking at around 130 to 200%. As we covered with the US dollar, this is also dropping. US dollar weakness. Generally, there is going to be further increase in other commodity prices because as they're priced against the US dollar, we'll see, well, US dollar going down and commodity prices going up, even if only for the reason of being priced in US dollars. Now, this is at a new 3-year low. We checked this since April as the US dollar finally broke down from the 100 level. It held out for 10 weeks, 2.5 months, as it has done in the past, where it has held out after it reached a new 3-year low. And in the past, it's held up for a few months, 2 to 3 months, and then ran higher. In the case of 2020, that held up for about 6 months and then ran higher. However, in this case, we've gone and held for the 2.5 months and continued down. Now, this is what we have been talking about for years when it comes to the 18-year cycle. Second half of the cycle, US dollar typically comes down, and that then leads to the bottom. US dollar consolidates and starts the first half of the cycle heading up. Hit the like and subscribe to the channel if you've been following for this time, or if you want to continue to follow with the 18-year cycle and watch it play out in real time, as we have been doing here for coming up to, I think, 6 years now. Starting just before 2020 was the first few videos that I did back in late 2018 and to 2019, looking at this cycle. Very, very long time ago. Dollar coming down. I think we'll probably break down from this level here around 94. And if it does get going and break this 89 level, which has held the market up, that is probably going to be some pretty dire news headlines in the US, which then circles back to all the info that I've been talking about at the beginning of the video when it comes to the yields and the bonds. How does this help with Bitcoin? Well, I don't know, to be honest. I don't know what's going to be the case for Bitcoin in those years ahead. But in the short term, we have seen prices rise. We're seeing the final stages of the everything bubble. Basically, everything has been blowing up here, maybe except your altcoins. But in the case of commodities, so I've covered the stock markets going higher. Real estate has been going higher. On a national average there, many cities have been as well. This is the US, of course. Commodity prices going higher. I'm looking at the case here for silver, a new 14-year high. We've already seen softs go higher. Softs are basically all the commodities that we consume. You've got your cotton and cocoa and coffee and beef, orange juice, corn, you get it. So soybeans, things that we use on a day-to-day basis, they have all run into new fresh highs previously in the last sort of 5 or so years. And in the case of silver now, with the metals and the precious metals and the industrial metals like your copper and things like that, and then even the energies are starting to find their ground again. Silver, new 14-year high. We're looking for a breakout here of around $37.50 an ounce, and then that can take us to the previous old all-time high and lower top there at $44 an ounce, and then around number $50 an ounce was the previous old all-time high. So for such a long consolidation and then a grind out here over the last few years, I think could lead to a pretty significant boom towards the end of the cycle. Gold has already led the charge over the last, well, nearly 2 years to this high price of $3,500 an ounce. So everything does look like it's heading into this final stage, at least from the way I'm analyzing the market, this final stage of the everything bubble. I mean, if you need to see more than that to prove a bubble, I don't know what it is you need to see, but essentially prices have been going up absolutely everywhere. Platinum also heading to new fresh highs. This time it is a 11-year high, just touching a new 11-year high. Now, I'm interested in this because it relates to the S&P 500, which then also relates to Bitcoin and the price of BTC. Platinum, I've noticed here that it seems to be a late runner. We don't have many cycles to work with, but we can span back nearly 30 years. Looking at the previous move, you had the S&P 500 running up to these highs in the dot-com era. So the dot-com boom, 2000, you had the peak. The price of platinum was basically trending down into that low of around 1999 and then boomed late into that move and topped out after the S&P 500 peak. Then again, it corrected pretty heavily for a short period of time. The S&P 500, this orange line in the front here, that ran up, and platinum also ran up and then boomed late in the move. You can see it ran from 1,300, whatever it's measured in, I think it's an ounce, all the way up to $2,300. That's a pretty significant move in a very short period of time. And again, it was after the peak of the S&P 500. Fast forward to where we are today, the S&P 500 has continued to climb higher, new fresh all-time highs starting from roughly December 23, January 24. Meanwhile, platinum was consolidating for a long time and has started its boom here. So Coming back to what I've been discussing here, final stages of the everything bubble doesn't mean it ends tomorrow or next month or even this year. We can see here that it's run on for many months after that peak, but it's all part of that end stage. And the cycles are that long that we're looking at roughly 14 years from the real estate and economic cycle low. The stock market, of course, lowered in March 2009, and that's probably going to peak after this top here for the real estate and economic cycle. The peak somewhere around 25, 26. Stock market potentially late 26, early 27. Maybe it goes on longer. We just have to keep riding those trends to the upside. So my camera's bugged out. Give us a like if you'd rather not see my face in future. But moving forward, we're looking at MicroStrategy here as another end of cycle, basically final stage of the everything bubble leading into this peak. Now, technically speaking, MicroStrategy is in a stronger position than it was in the previous cycle. When it corrected after that huge blow off top in November 2024, it corrected onto the 50% level of the entire cycle, low to high onto that cycle. Now, last cycle, it ran from the low to the high and fell underneath the 50% level. That's the orange line through the middle. And it spent the entire next leg up trying to make it back to the 50% and hold above that level, only to finally find itself failing at the corrective 50%. However, this time it's made it back to the corrective 50%. So that's from the blow off top to that low. And it's now trading above that 50% level. So technically it's above the 50% and above the corrective 50% and sits that in a much stronger position. However, on the flip side, it still has not put in a new all-time high, while Bitcoin has put in multiple new all-time highs since the first all-time high in November. So at the moment, you still got lower highs forming, although this latest move in May has been a good sign to at least hold the strength here, and provided MicroStrategy holds around $350, you'd have to expect that we've got further upside to go here for MicroStrategy, and it could be that it sees a new all-time high. In terms of a time frame, there is about 7 weeks left until we reach our first time frame for MicroStrategy. That first time frame comes from the time frame of the previous cycle, where it had its blow off top and then ran into its lower high at the end of the cycle, which lasted 273 days. So 273 days takes us out to roughly 18th of August. So looking forward to that week there to see where Bitcoin is at. Do we hit a new all-time high? Do we fall short again? Is Bitcoin just loading the tank until it absolutely rips higher? I think this chart is going to have the answers to that question. USDT dominance still really playing with the heartstrings here as it holds above 50% of the entire range now. So this 4.75% that you see right here in the corner is the all-time high down to the all-time low of the USDT dominance. And as we film, the USDT dominance ran higher, hit the 50% level of the run up. So that's the bear market move for Bitcoin over this cycle, and rejected off that level now around 4.95, and then came and sat on the other 50%. So it's really doing everything it can to hold up here until this breaks down, until you start to see the USDT dominance and USDT flow out of USDT. Basically, the market selling USDT, which would then lower this. What are they going to be selling for? Our hope is that it's at least Bitcoin, and hopefully for the rest of the degenerates out there, it's going to be something like the altcoins. Once we get that breakdown of 4.4, that's going to give us the next signal to start watching the levels around these lows between 3.7% and somewhere around that high there, 4.4, the low, which would then be the high, 4.4. Now, the final thing with this is the hopium. To me, this is the bull mania where things would go absolutely nuts. And I think in this case, if Bitcoin is, or sorry, if USDT dominance is to break down from 3.7, that is going to be absolute chaos for Bitcoin and for the altcoins. Chaos in a good way. And that could be another strong reason to expect that the MicroStrategy price could go higher. On the flip side, always good to be prepared is that if it does stay in this zone, and that's not to say that we won't see Bitcoin price up. I still think Bitcoin price is going to go up. What I'm talking about here is how much is the accelerator going to be pressed? How much fuel is going to be put on the fire? This is the fuel right here, USDT and USDC. Is this fuel just going to be trickled out, or is it going to be poured like an absolute shitstorm on all of cryptocurrency? That's the difference here. So if it stays within this zone, if it's contained, then we're probably just going to see more of the same, more money going to Bitcoin, less money into the alts. If it can break down from this low, that's when you're probably going to see that mega alt season. Similar sort of thing for USDT and USDC dominance combined. So we don't need to repeat much of that, except for the pricings are going to be different. We're looking for a breakdown here of about 6%, and then a final breakdown of the lows that sit at a nice clean 5%. So if it's contained between 5 and 6% of the combined dominance of USDT and USDC, then it's probably going to be a contained fire, a contained bull market, mostly Bitcoin, and probably a trickle out into the alts. You can see here at the bottom, any of these alts really. But if it does break down this 5%, that's when you're really going to start seeing a lot of the altcoin influencers come back. Probably very short-lived, to be honest. And yeah, the other sign to that is if you do start to see a lot of new faces or old faces pop up, just shilling the absolute shit out of altcoins left, right, and center, that's going to be a nice big start to sell signal. Not an absolute sell it, but just be wary. Be absolutely wary if we get into that space. So for Bitcoin running into the end of the cycle, if we do get this really big move higher, my theory is still that we could be seeing our first high within the next sort of 6 or so months. That comes out here. You know, we're looking at that price time frame of around August as we lead into the end of the cycle and the roughly 1,060 odd days into a peak. However, if we are going to see this extend for this final stage of the everything bubble, here it is. This is the end of the real estate cycle. Then maybe we see a cool off period if there is this big move higher. Forget the pricing on the side. I'm looking at the pattern here, a move higher with a pretty significant cool off and then a final move into that peak. And that's if the stock market keeps running hot. I would still expect that Bitcoin peaks before the S&P 500, but possibly somewhere around where the NASDAQ peaks, which is basically the same thing that we've seen over this entire cycle of Bitcoin and how it's compared to the NASDAQ. So this correction, all I could see with this correction is it may be something similar to what we've seen in this cycle already, possibly a little longer here. So this one here was 5 months to the low. Maybe this thing is 6 to 8 months after a big peak, but then that's given it enough time to run into this final peak, which basically starts the next 4-year cycle and multi-year bear market, which lines up with a multi-year bear market for real estate, for the economy, and probably the stock markets as well. But that's a long way ahead of us. I'm still looking forward to this new fresh highs and potentially a massive breakdown of the USDT dominance. For altcoins, we're still seeing price hold above 800 billion. So this is a total crypto market cap excluding Bitcoin and ETH. So still positive signs here for alts that they can make it. They haven't yet broken out of the highs, which are about $120 billion away at 960 billion from current pricing. Any breaks below the current lows and the 50% now, which are pretty damn close, so that's 720 to 750. That's probably game over there for alts. So if there are closes underneath that 720, that's probably game over there. Others dominance has continued to hold around this low, new 4-year low level at around 7 to 7.1% dominance of the whole space. For a sustained rally, I would need to see an overbalance in time and price. We are on a weekly chart. The largest rally we've seen so far is 1.22. So 1.22 from the 6.8 low brings you to about 8.1%. That's going to be an extension of the dominance compared to any of the moves on the way down. Once it can do that, then it can start to look at tackling the previous support, which may be resistance yet again. So there is resistance there and there. So I think for alts, it really does need to get back above the 9% level overall to at least cover, 1, the overbalance in time and price, and 2, the previous support resistance flip. Unless that happens, these are going to be those short-lived alt seasons. In terms of alts, ETH has held the line again at $2,200. So that's a good sign there for ETH, and is attempting to reclaim one of its highest weekly closes that it's seen for many, many months. So far, it's been held out at around 25 to 25.50. So this could be the week that we see the highest close in many, many months. And for XRP, holding at 224, pretty reasonable signs here, considering it's held above 50% and above the $2. Now, the big trigger is going to be above 250 and consolidation above it, as we haven't held above that line since February. So since then, we've seen the March drop, we've seen the April tariff drop, and we've seen the most recent June drop, which was the war, Iran versus Israel. So above 250 is going to basically set things up for that next move higher. And like I've pointed out before, XRP has gone on some pretty significant cyclical runs over its entire history. Each of these moves, you can read here, these are in months, have lasted roughly 1 year. And if they are longer, they generally do double. So you've got the downtrend here of 2 years, another low to low of 1 year, so 13 months there, a low to a high, 12 months, a high to a low, 2 years, just a touch over 2 years, a low, very significant low to a very significant high, 1 year. You can see here when I take it off logarithmic, huge move from 10 cents to nearly $2. Then 14 months down, so nearly a year, or just over a year, up 13 months, down 12 months. We're into that period now. 13 months will be August. So if this is to be, maybe we see August, maybe we see September as a final blow off top move here for XRP. Otherwise, if there is some strange miracle for XRP, which it kind of has never done in its history, and it runs for 2 of these periods, that could take it out to mid-2026. So I'm not thinking that that's the case yet. I'm still watching for the 13 to 14 month move that it's done in the past. Keep watching, hit the like, subscribe to the channel. I think there's got a lot coming up for this end stage of the everything bubble. And grab the free reports that are coming out today on Bitcoin and your new updates, which will come out next week. See you guys at the next video. Thanks again. Peace.